This is looking kind of bullish, guys.
Yeah, it's bad news is good news.
Yeah.
So tomorrow we'll bring the real thunder.
I was expecting more of a sell-off after open, after that news. If we were going to be balanced, or trading to the downside. But this is, I think I'm looking for longs today. I might have missed it.
I mean, to be honest, I already missed it. Yeah, to be honest, I was going to try and go NQ long at about 8:35.
Central?
Or no, Eastern, sorry.
Okay. My setup to get long there would have been on that previous pullback on ES, so around like 44.06. But I was more looking for a short at the time, but now I am not, but I missed it.
I don't know if the daily actives are actually going to do anything today. Be tight for what's going on here. I don't know why I don't know if they're going to work. Already rejected yes daily active. This one from the underside once, and now this is the second time. So that level's 44, 14, 12. Jump. Apple very closely today. Apple and Microsoft, to be transparent. Apple slightly more important. Well, actually, I'm going to set up a triple split screen with NVIDIA on it as well. Which I haven't really looked at yet. So that's an NVIDIA gap up. Up on ES and NQ. This. Yeah, right there. Pay attention to London High from the 8th. London High from the 8th, that would be 1898.4. I'll mark that in right now. So that's back adjusted. That's what's gonna fuck it around. It's just back adjusted. Fuck's sakes. That's it right there. Action. Back ES 4416 potentially short. And Q is already off. Watching Russell here. Apple is turned. Nvidia is turned. And Q has half filled the gap. Wasn't deep enough pullback, but still watching Russell has a chance. NQ is the smarter play today. It's already paid me. It could have already paid me my day's wage twice now today, quite easily. Where ES is, maybe 20 ticks at best. There's the Russell down. Still get a pullback here. Let's see Russell pull back into 98.3, give or take, but it might be already too late. Thank you, paying, yeah, big time. Alright, if somebody's asking questions, I don't look. I'm gonna do my fucking trades. Oh, wait, PPI and FOMC? That was ES 44.14, 25, 44, 24, 50. See what happens here at ES major level. This is the pullback to Russell. I just don't like it. It's good though. It's good. I should probably take this. Time frame. There's that pullback. I should have got that, but I didn't. Fuck. I should get it still. Damn it. Whatever. Shit! Good. For equities. I can only get you the entries. I can't give you everything. You're gonna have to cut it on your own if you don't like it. and on like a 12 or fucking whatever it is day winning streak, 35% for 2 weeks or some shit. So kind of watching that as well. Reversal. We'll see. Watching Dow Jones for the reversal. And Q wants to close the gap. What the fuck is this? Oh. A reclaim on ES and NQ. Fuck. Dow Jones did not reverse. Now, when it breaks right here, then we might be ready to start jumping gaps. Yeah, it's on, I bet. But, I mean, that NQ is really what's making it. So now we're going back to NVIDIA and Apple. Probably could zoom in a bit. Go to about there. See what gold says. Gold's just about to reject that level again. We'll see. Well, it's trying to attack it from the top side. Bonds and dollar working in harmony. Tesla's falling. It's at open price right now. It had a bit of a rejection at last night's close. So that's kind of important. Just gonna zoom in and mark that. Mark that close. careful. Apple's holding that level. It's an important level. It's right now. Gold is now touching that level. See if it wants to. I'm going to zoom in a bit. Looks like it wants to reject that level to the upside. See what Apple does here when it pulls back. NVIDIA as well. But it looks like a trap. That would be Russell high a day. And some. Trap commenced. And Q came an awful long distance to not close that gap. We'll see what happens. fellow that was doing that. That was Amazon. Apologize. That's the NQ. Should have. That was borderline. NQ filled there. I think we were off by a tick to fill that gap. That's fucking interesting. More room in Apple. That Apple level is 182.94.
Good morning.
Retro.
I see that I was summoned when you said fucktards and twats included.
You did get it. You did get it?
No, it wasn't.
No, but it actually signaled you?
No, it didn't. I just see it in chat. It didn't signal me though.
Yeah, that's what I was trying to. I don't know why it's not doing that. It's supposed to signal everybody.
Maybe you don't
And
have
it's not
permissions.
The fuck. Not that I wanted the fucktards or the twats to. It was because I was posting something else, and I guess it's not going out. Everyone.
Yeah, I don't think so.
It's the gap fill on Q, I'm pretty sure.
Yeah, looks like it.
It is there. Financial sector sideways for the day, but sideways nonetheless right now.
This week is a hard week. I don't like it.
Yeah, if you weren't already long Russell like I am, I wouldn't even have. Yeah, there's nothing.
Yeah, there's nothing to play. It's like. Were you long from like when you told me?
Yep. Yeah, added to it as well.
Oh wow, nice.
Yeah, added to it at a nice spot too. Should have added again, but I mean I didn't. I guess it didn't really give me the pullback. It did, but it was actually in the same day.
No, yeah.
I didn't really want to do that again.
No, you don't want to like over leverage into one trade.
I have to take a look at this shortly though, because it's gonna want. I want to take something off here soon.
Yeah. What's the target?
I would think 1930s. I mean, I bet you it's going to run shy of that. Probably 1920s.
Did Zero give a target for it? I don't know if he
I'll
did.
double check that target. Yeah, like, you know, we've got a major level at 54, but I mean, might be a little deep.
Yeah. Well, you never know. You could probably hold one until then.
It might go to 54. We'll have to see what NASDAQ and that do.
Well, it seems like a rotation into like small caps and out of mega tech.
It doesn't make sense. Nobody wants to be in small cap.
No, but you would if it's going to be a bull market. Like if people are going to
Oh, I
turn
see. For
bullish.
growth? Sure.
Yeah.
You just pick something shitty and it's going to go up 300%. Sure.
Yeah.
Okay. Well, that kind of makes sense. Pick anything shitty.
Right, and it should go. So
Actually, watch some of these equities. Take a look at Upstart. Have you seen
oh,
it?
is that thing back?
Yeah.
UPST?
Yeah. Fuck me,
Holy
man.
shit,
Like,
look at that.
it's awesome, right?
Oh my god.
The chart, like, seriously, that chart looked done. Like, done.
Ugly. Ugly as anything.
SPST.
Let's check some of these shitty names.
I
Look at
thought it was done, man. Like, look at the chart. It's done.
Yeah.
And then we got here just 107% done.
It's kind of crazy.
Less than a month. I can find you one of those, but I mean, I can't look at them anymore. Too tempting. WBI. First wave biopharma. Sure thing. You see 1, 2, 3, 4 reverse splits. That's chart. Some gap and crap. Let's go right. What was the FW? Apple doesn't seem to be holding that level. This is going to come down to the wire. Microsoft is into its level, but I mean Tesla just needs to stay above. Sorry, close the day above 249.92.
249.
At 249.
Tesla.
That's just yesterday's close, right? We got like I think it's a 13-day win streak on it right now, so that would
Yeah.
Dinguth, it is downtrending, but I mean, we just need to stay above that level of 329.99 Microsoft.
Yeah, I mean, Apple, if it rejects here, then is 184 the 185? Is that the high? All-time high?
Oh, see, because we hit in a pre-market today. A pre-market threw in a new high, but I'm not going to count that.
Oh, you don't count that?
Just today.
I guess, yeah.
It's just that it's rejecting where it was the all-time high before.
Mhm.
One thing I did note from yesterday, if you look at where everybody broke at around 2:50 Eastern Standard Time, if you take a look
Yeah.
at both Microsoft and Apple, they both broke out at that exact moment of those two levels.
Okay.
What makes those levels important to me? And realistically, NASDAQ has done its job for the day. It doesn't have to perform anything else. It's just, it's completed its project. It can do more, I'm not saying that. It would be extra credit on its account, but it did its job today, which was close the gap.
It did, but not ES.
Exactly, so now ES can do whatever it needs to do to take that time off the clock. And NASDAQ can just kind of...
Or
I mean,
cool
it's
off.
just,
Yeah.
yeah, let it, like, give it time. That's what's going to happen, potentially. Is it going to close the gap? I don't know. Maybe they're going to save it for tomorrow. Is this the high? I don't know. We'll have to wait and see. Tomorrow could give some wicked whip, whatever you want, and canoe look
I mean,
high.
Everybody's
on it,
expecting, but everybody's expecting them to pause the rate hikes. If
They have
that's
a
the
new thing now,
expectation,
right? There's a pause.
Yeah.
What is it normally? It's a pause or it's a
a raise.
raise. Now they've got a new one that's called skip. You have to really watch their language when they come out. If they say skip, that
Oh,
means, hey, we just got to see what happens.
it's not a pause. It's the skip.
We're not left.
Yeah,
We're not left. We're not right. We're just gonna skip. For now.
we're gonna
See what
wait.
happens.
We're waiting. Yeah, that's
waiting.
different.
So,
Yeah.
that is totally different, right? So we'll have to see what their language is.
I mean, how much more can they hike? It's like I feel like they.
Just some sort of
You just have to wait. You just have to wait for it to like filter through the
trying to get
system
back
at this
to that
point.
2% inflation or some shit. And
Yeah, but if you keep hiking and
No, I know,
hiking, like it's
they're
just
gonna
like, what the hell are
they're
you
gonna
doing?
cross, right? At one point, they're just going to be it's going to cross, and they're not going to, they're like, oh, fuck, we overdid it. Oh, yeah, because you didn't, you know what I mean? You got to have time.
Yeah.
If anything, sometimes the other nations lead inflation, or like the rate raising. So Canada just raised.
Yeah, they did.
They were on pause for like rotations.
How many really they paused? Like for how?
Yeah,
You
I
remember?
can't remember exactly. I'd have to look it up, but I think it was like 3 rotations. So they've
That's a
stopped
lot.
raising 3
Yeah.
cycles ago, right? And then now
Yeah.
they've come and said, "Oh, wait a second, we don't have it yet." When they win again, which in my
Yeah.
opinion is.
Which I think
I
it's
don't think it
fine.
I don't think it was necessary though. Like it wasn't necessary.
To what? Raise?
Raise Canadian rate. Yeah, no, I don't think it was necessary because all the data was coming in fine, really, right? Like it was just kind of. Oh, is that a precursor for to expect?
Yeah, I mean, you can obviously look at these neighboring markets to kind of get a idea of how inflation will play out here. But But I think it's fine to pause it, right? Because you don't want to overdo it. So it's almost like precautionary. Okay, let's pause, see what happens. If you're not there, okay, let's go back and resume. Like it
That's
almost
what I
seems
mean.
like that's more prudent.
That's what I mean about that skip, right? Like that's a
Yeah, yeah. I think it's fine. Like if they want to
Just
skip
gonna
it, it gives like
our turn. We're just gonna skip our turn this time.
gives a chance for people to breathe. You know, if people have debt and have to make payments and stuff.
What was it? Commercial real estate needs a there too here too. Breathe. Yeah.
Yeah, I don't know if the real estate market has budged. To be quite honest.
They seem to want to overcook it really. They're the greediest of the bunch, it seems.
Yeah. I think you're right.
And then it's amazing because they always say like, oh, like in like say February or March, like, oh, the market's down, and I'm like, only down whatever. If you balance that off with the 5% it was up last year, we're not that. I mean, it's like, oh, we're already down a percent in
Yeah.
January, and I'm like, yeah, but you're up 5% from like the whole year, so we're only down, like we're still up. Like I don't get it. Like no, we're still down, and I'm like, yeah, but you're not.
Yeah, not by a lot.
Until we start seeing consecutive years of like say -1, -2%, we can start to kind of get a little concerned with real estate. But I mean, it's the one thing they're not building more of, right? Is land.
That's true. It's a finite resource.
I don't know if I'm going to get a trade off. If I am, it's potentially going to be a Russell signal. Kind of already botched this morning.
This is just very slow. Like there's no volume yesterday and there's none today. Like I can't look at this.
I'm not the greatest at trading the morning either.
But the morning's even done. Like this is
We're past now, like so. It's like
yeah.
I mean, I've already missed my window. I already like kind of. I'm not tilted, but I mean like I'm half tilted because I had a trade and I just didn't pull the trigger because of there's certain things that were going on, and I would have made my day already. I would have already been happy enough to be finished almost for the day, but so I'm still kind of like now I'm like kind of searching and like scraping, trying to fabricate a trade. Whereas like if you don't see it right away, or sorry, in real time, searching and scraping and trying to fabricate trades is like not the greatest in my opinion. You're just gonna fucking take trades because you're like, I need to make some money.
I'd rather just take the day off.
Why not Thursday? Why don't we just make 3K on Thursday and shut the fuck up? Like that's the part that they can't. It's hard to be like that, right? Because you're like, I need to make it now because how else do I prove that I made the money? It's kind of a funny thing, like saying in real estate, you don't really make any money until the very end. You go to sell and relieve the equity from it.
Yeah. I think I'm gonna go
You don't
like
feel bad about it, right? You don't feel bad about it at all. You just keep paying into it and you're like, oh fuck, everything's cool. Top tick Russell. Tick Russell. see how ES reacts here at this level coming up.
I'm probably gonna hop off. There's just no volume here. I can't treat this.
Is the volume low? Yeah.
Yeah.
Uh,
I have a volume chart and I have no candles.
are you running still the U contract?
I have the M contract and I have the U contract up.
Okay, cool.
I have both contracts up.
They
There's just
close?
there's nothing happening.
Which one's got stronger volume? Is it still you?
Yeah, I think it's moved over to you. But there's just like no candles printing. And usually I have a lot more candles and variation. So all right, I'm gonna go.
Best. I might call it
Yeah,
off as well. I don't really. I don't see much
I'm
going
just
on.
gonna do some other work. And
There's always the work, trading work that nobody wants to do.
exactly. I'll talk to you later. Bye, guys.
Okay. Have a good one. I might cut it as well. See what 11:30 brings. Might be more like a 2 o'clock thing for me.
See ya. Training Nut, episode 151.
Everything has a cost, and it comes back to the biggest cost is time.
there are guys who will
figure. When I read that, it gave me like so much belief to keep going, because if you think about it, like this is one of the most competitive industries in the world, one of the most lucrative, and nearly 50% are dropping out after 1 month. Like, how can you possibly think that you're going to go up against, the best and the brightest from all over the world? Hedge funds are hiring people from MIT and all these places to trade and stuff like this. So how can you possibly even, try to think that you're going to be profitable after a month? So just don't give up. And then, if you just don't give up, you'll probably get there. Honestly, it's literally as simple, because trading isn't hard. It isn't really in the long run. It doesn't need to be so hard. It just is hard because you need the experience. And so if you give up before you have the experience of knowing how to trade, then you're never going to get there. So yeah, just don't give up. Simple as that.
Yeah. Good advice, as you mentioned at the start of the show. Now, what we'll do is we'll wrap up here with a few quick fire questions. And to start, first one is, how long did it take you to go from newbie to consistently profitable?
About 3 years.
What's your favorite entry setup?
Break and retest. Yeah.
What's your recommended trading book?
Break and retest. Yeah.
What's your recommended trading book or resource?
Yeah.
What's your recommended trading book or
break and retest? Yeah.
What's your favorite entry setup?
Break and retest. Yeah.
What's your recommended trading book or resource?
Trading in the Zone by Mark Douglas. But yeah.
And the Trading Up podcast, obviously.
Oh yeah, sorry, yeah. Of course,
I thought this was a leading question, but obviously not. What's your preferred broker and trading platform? Look, folks, I know you want the answer to this question. Which broker is this trader using? I need to go. And do you want to walk us through your worst ever trade?
Yeah, it was Dow Jones when I decided to 10 times my position size overnight because I was all of a sudden a big boy trader.
Yeah, all right. We heard about that one. And if you could leave our listeners with one piece of advice, what would it be?
Try to master emotional detachment during the trade and while you're entering the trade. Yeah, just be
easier said than done. Now, I don't think you.
Yeah, so like I don't sell anything. I'll never sell anything. But I created a Twitter account just the other day. It's Freedom Pips FX. So if you want to, I'll just be. Be throwing up like just stupid memes and also like chart setup as well. I'm going to start posting on there kind of just like the types of things that I'm looking at for the week ahead and stuff like that, or just whatever I can really. But yeah, just if people want to reach out on there, that's cool.
Awesome. Well, look, Folks, a big thank you to Ben for sharing with us today everything we've discussed here, along with that Twitter link will be in the show notes. To find them, simply search for Ben in the search box on tradingnut.com or check the link. This video is brought to you by
so it really doesn't make too much difference for me. Obviously it makes a difference in the social life aspect of things, but in terms of the actual trading, it's not made too much difference. We've actually seen quite a bit of volatility and movement in the market due to the current world situations. So
by the end of this video, you're going to have everything that you need, from the information to the tools, in order to become a funded trader. Right now, you're struggling to understand ICT concepts and how to put them together in order to get high probability setup. setups. You probably watched a ton of videos, but you still are lacking on your execution. I totally understand because that was where I was at before I became a successful funded day trader. So in this video, I'm gonna go step by step, A to Z, on my high probability setup checklist and the exact trade model that I used to get funded with $300,000. So enough of the chit chat, let's go ahead and get into it. You're tired of making trades based off of hunches or gut feelings, because gut feelings equate to losing trades. If we don't have a strategy, we're emotionally driven, and when we get in the market and we're looking for whatever it is we want to see, our brains they'll see that, and if you don't have a plan to keep you in line, then you will have no consistency. Most of you have probably learned all sorts of different ICT concepts, but have no system to execute them. This is worse than not knowing anything at all, so pay attention, take notes, and watch carefully to the end to learn the strategy that I use to get funded. And at the end, we're going to have a lot of live market examples, so make sure to watch all the way to the end. I'm sure most of you have found yourself stuck in trades, unsure of which way that the market is going to head. We're going to learn how to identify the higher time frame bias to increase your chances of success. Step 1 to finding high probability setups is building the idea or your higher time frame bias. If you haven't watched my video on bias, I highly recommend it. I will put a little card up in the video that you can click on to watch that. Our higher time frames, such as our weekly, our daily, and our 4-hour charts, and we're going to be looking for structure and points of interest to give us our directional bias and draw on liquidity. So a POI or a point of interest can be fair value gaps, order blocks, breaker blocks, liquidity pools, and volume imbalances. Whenever we are looking at our higher time frame structure, we want to look at it in context of, where is price likely to go based off of displacement, based off of what kind of point of interest we've tapped into. So for instance, let's say if we have a pattern like this and we've got our shift on the daily and our most recent impulse structure is bearish. We're going to be looking for points of interest in a premium of this range. So maybe that's a fair value gap, maybe it's a balanced price range, maybe it's an order block. Again, points of interest, it doesn't necessarily matter which one, but we're looking for a point of interest at a premium of a bearish leg. Now, of course, this example goes the opposite for a bullish example. So if we're looking at it from that perspective, we would look for a discount point of interest. So once we've identified the overall direction with our displacement and we've got this big push that's caused a break in structure, and it doesn't have to be a reversal. This could have been just a continuation. It's whichever way that the market is currently displacing towards. What are we reaching towards? So you may be able to find bias, but you struggle to find the correct draw on liquidity, and this leads to missed opportunity and losses. So this next part is going to completely change the way that you identify your draw on liquidity. So I have two different ways of looking at draw on liquidity. First off, we're going to have our low-hanging fruit and our endpoint as our possible targets or draws on liquidity. Low-hanging fruit really is just the closest area of liquidity. Let's go back to this example we had before. We've got our overall impulse structure, which is down, and that's given us our range that we're looking at. And we have our point of interest in a premium. And once price, starts to return up to this area, where is it likely to go? Right here. That's our closest area of liquidity. It's our closest pro-trend structure. So if we're bearish, we're going to be looking for lows or sell-side liquidity. So that's our low-hanging fruit. That is going to be our first target for our trade. Now, maybe on the daily chart, we're looking at something where we have a range we've established, and the overall external range may be bullish, and this is just a retracement we're playing. And maybe there was some form of, equal lows or some kind of fair value gap or something like that in a discount. And whenever we get this shift down right here, that's the market telling us it's reaching down for this liquidity that's down here. So that would be our endpoint. So if the market is going to come back up into our area and we get some good price action, we're going to be looking at both of these areas as our take profits. So number one there, and number two at our endpoint, which is our daily draw on liquidity. Do you find yourself tripping up when it comes time to actually execute? If so, pay attention to this next part extremely close. So step 3 is we're going to learn how to confirm this bias and confirm our draw on liquidity with our 1 hour and our 15-minute charts. Once our price has reached a higher time frame point of interest, like we've talked about, we're going to look for lower time frame displacements to confirm that smart money is indeed active. We're going to look for raids on internal liquidity into our higher time frame point of interest plus a shift in structure. And if we don't have a raid, we don't have a trade. Remember, smart money is all about liquidity. So people trying to trade without a liquidity raid is such an oxymoron, and it doesn't make any sense because if smart money needs liquidity to trade, so should you. Now, SMT divergence is a added confluence, but it's not required for my strategy. Now here's the kicker. Once we have our displacement, we're going to wait for price to return to either a fair value gap or even better, a fair value gap plus a breaker block that caused a shift in structure. So for example, let's say we have our overall push to the downside, and from this we have our displacement range. We've identified that we're looking at a breaker plus a fair value gap. So here's our breaker we're imagining, and we're going to go over some live examples, so don't worry. We'll say we have a fair value gap inside that breaker block. So we're looking for price to travel up to this area. But we're not going to get just something as easy as that. I mean, sometimes you will, but that's not what we're talking about in this strategy. What we want to see is liquidity built up under our area of interest. So what this does is it builds liquidity from people that are maybe looking to go long on a breakout above all these equal highs, or they're going to get stopped out of their shorts. So once we've identified this liquidity pool, we want to see price rush up into our point of interest. And after that, that's where we're going to zoom into another time frame to see what is really going on and get that double confirmation. And this is where we're going to find our trade entry. This is one of the most painful things as a trader, is slipping up at the last second only to watch the market go without you. So if that's you, pay very close attention to this next part because this is going to fix that completely. So step 4, execution. This is everybody's favorite part. So number one, we're going to wait for the kill zone. So for this strategy, we're talking about trading NQ or ES. So we're going to wait for our 8:30 to 11 a.m. or our 1:30 to 3 p.m. And this is all in Eastern Standard. Time. So the most important part is you have to wait for the kill zone, and if you don't get that, then you don't trade, right? Remember, we're building a strategy that we have to adhere to, or we have nothing at all. Once we get that, we then want to make sure that there is no red folder news on forexfactory.com. So you can go on to forexfactory.com, check, today's the 14th, we had a bunch of CPI, and tomorrow we have PPI. So let's just say you're coming into the market and you do have red folder news. You want to make sure that you're not into the trade right before it. You want to wait for the news to play out and then look for a trade. Don't be in a trade during a red folder news event. So after that, you want to wait for a tap, sweep, and shift on the H1 or the M15 zone. As price is reaching into our 1 hour or 15-minute zone during our kill zone, we're then going to watch for our lower time frame entry pattern. So let's just zoom in on this a bit and see what it would look like going on the 5-minute or the 1-minute chart. So as price is reaching into the zone, we want to see a sharp push above a short-term high into the zone, and then we want to see a break of structure with displacement. This is going to confirm again, just like we used the 1 hour or the 15-minute right here to confirm our daily zone. So after price has tapped into that daily POI, we then watch for the 1 hour pattern, and we're going to look for that same pattern on the 5-minute or the 1 minute. You can see how we're basically just layering these confirmations to be really confident. So once we get this kind of price action on the 5-minute or the 1 minute, we're going to look for an entry. So we need displacement under this low. So we have 2 options here. So option 1, and this is what I do a lot of the time, is market entry on the displacement candle closure. So for instance, if we're looking for a displacement here, and don't worry, I'm going to go over live examples, and we get a candle closure, one could just go ahead and mark it here, and that would be your entry. Now, option 2 is looking for a fair value. We go over live on the displacement candle closure. So for instance, if we're looking for a displacement here, and don't worry, I'm going to go over live examples, and we get a candle closure, one could just go ahead and mark it here, and that would be your entry. Now, option 2 is looking for a fair value gap or a breaker inside the displacement that caused a shift in structure, and then set limits off of that. So for instance, let's say we have our displacement leg right here, and we have maybe a lower time frame breaker and a fair value gap right here. So we could wait for the trade to come back up to that area, just set a limit there, stops above that swing high. So option 2 will give you a better risk to reward, but it's going to result in missed trades. So you kind of have to pick which of these is a better style for you as a trader. Me personally, I like option 1 because it gives more opportunities, and oftentimes the risk to reward is not much different. And if you are trading a high probability setup, you usually have a good enough distance to the take profit in order to take a good trade with good risk to reward. So I recommend minimum 2-to-1 risk to reward. Anything lower than this isn't really an A+ setup. Not to say you won't have any profitable trades, but again, we're talking about our best of the best high probability trades. Do you find yourself ever taking profits too early and not managing your trades correctly and then watching the market go without you? Well, pay attention to this next part, because this is how I manage trades on my funded account to get maximum profits. So I keep trade management really simple. So I break even my stops when the entry time frame external structure changes. So what does that mean? For example, let's say if we have our overall structure moving into the point of interest on the 1 hour. So let me draw this out. So we'll say that our overall structure moving into the point of interest is something like this. Let's say that this is our external structure. If you don't understand structure, I highly recommend watching my video. This will help you understand this tremendously. So once the market comes back down into profits and we break that external structure, that is the point where I break even my stops. So instead of having my stops at the recent swing high, I bring them down to break even, and that de-risks me from the trade. If the low-hanging fruit has been hit, then I'm going to break even my stops if they haven't already. So sometimes that'll happen before the external structure changes. Usually it doesn't. And also at this point, I trim 80% of the trade. After that, I leave 20% until the end of the session, or until it hits the end point, which is the daily draw on liquidity, whichever comes first. Okay, so now for a live example. So here we have NQ, and we're looking at our structure, which remember, step 1 is to identify our bias. So we're on the daily time frame. We have a displacement leg down. So this tells me that the market is reaching lower. We break structure with displacement. We look for price to come back up to a premium of the displacement break of structure leg. And then we look for our premium points of interest. In this example, we have a volume imbalance and price is traded into it. So price is at a premium. In this example, we have a volume imbalance and price is traded into it. So price is at a premium of a bearish range. We're going to be short bias here. We're going to be looking for shorts. So next, let's go ahead and hop down to the 1 hour time frame, and we're going to watch our 1 hour structure shorts. So next, let's go ahead and hop down to the 1 hour time frame, and we're going to watch our, we're going to be looking for shorts. So next, let's go ahead and hop down to the range. We're going to be short bias here. We're going to be looking for shorts. So next, let's go ahead and hop down to the 1 hour time frame, and we're going to watch our 1 hour structure in this time frame. So in this example, we're going to be looking for price to push under this low with displacement. So once the market gives us our displacement, we want to identify the most recent swing high, which is this candle right here. After this, we're going to look for higher time frame points of interest such as breakers or fair value gaps in order to enter the trade. So if we zoom out to the 4 hour, we have a very clear breaker block right here, just that last down candle before the radon stops into the higher time frame point of interest. If you don't understand breakers, I highly recommend my video. I have a great video that explains them all through and through. So here we have our 4 hour breaker, we have our displacement, shift, and structure. So now we have our framework and we know where we're going to be looking for trades. Now, this next part is where my model differentiates from a lot of people's, including ICTs. So you'll notice we have a fair value gap right here. And this trade, there's nothing wrong with it. But remember, we got to wait for internal liquidity to generate. So at this point, yes, we get an entry there. And you could have targeted this low right here for a scalp. But to me, that's not an A+ setup. We're not taking out any internal liquidity, and we really aren't getting that much risk to reward there. So that is not a trade I would take. Boom. Now we have our internal liquidity taken. And a lot of people also look at this as a power of 3. We get that accumulation, manipulation, and distribution. So once our price has tapped our higher time frame POI, remember, we're going to wait for our kill zone at 8:30 to 11 a.m. And this is 10 a.m. New York time. So this checks out. This was on March 9th. You see there was no red folder news. So now we've checked 2 of our boxes. Next, we want to wait for a tap, sweep, and shift of the H1 or M15 zone on the execution time frame. So let's go ahead and zoom into our 5-minute time frame and see what that looked like at this point. So now we have our displacement break of structure, and we have a very clear fair value gap here. So option A would have just been to enter on the closure of this candle, stops above the most recent swing high, or option B would have been to put limits on this fair value gap, which I've tagged you in right here. So next, we're going to target our low hanging fruit. Remember, when we go back to the 1 hour, what is our closest liquidity? It's going to be this low. So if we're bearish and our daily draw on liquidity and we're expecting to go all the way down here, our low hanging fruit is just going to be the first area of liquidity. So we're going to target that low as our first target. Just that alone is going to give us a 3.4 to 1 ratio. Now, you can just take the trade all here. That is a great trade, and I'm all about taking money off the table. That's why we take 80% of the trade there, and we leave another 20% for the daily draw on liquidity. Where we got that daily draw on liquidity was the low of the daily displacement. Because remember, the overall expectation is to continue down. Since the daily has given us a displacement down, that's telling us that the structure is bearish and we're going to expect a lower low. Let's see how this trade played out. You can see it went into a little bit of a drawdown, took out the low-hanging fruit very quickly, and now the trade is moving to the next session. Now here is where I would have closed in full. I would have closed right here around 3 p.m. And that's just because I trade on a funded account and I try not to hold through these gaps. But if you are a swing trader and you'd like to hold, that's okay. And there you have it. Price is now reaching down towards that draw on liquidity. Let's see if we can get it without getting stopped out of break even. Because remember, we put our stops at entry. Boom. Price tags it. Again, this isn't how I would hold it, but just to show you that once you have good analysis and you understand the draw on liquidity and you pinpoint a high value area to get in, now you are seeking out that liquidity. So again, I would have closed the trade mostly in full right there, but even that is a beautiful, we've already taken 80% there. We would have taken that last, we'd have taken the last 20% right around here on this candle, since that's the 3 p.m. candle. Right there, that's 6 to 1 on the last little bit of your trade. Amazing day if you take that on a live account, especially if it's a funded account. And that really is it. And there you have it. That's my high probability trade checklist that I use to get funded. By following these steps, you're going to be able to identify trades with a much higher probability of success and avoid some of the common pitfalls that traders fall victim to. Remember, trading is all about discipline, so you really got to wait for setups like this or what whatever your A plus setup is. I'm a professional prop firm day trader, and in this video, I'm going to show you how I use breaker blocks in my trading strategy. Breaker blocks are probably one of the most misunderstood strategies in the ICT concepts world, simply because people don't know when to use them. So in this video, I'm not only going to show you what a breaker block is, I'm going to show you how to use it and then give you live examples on a chart to show you how to enter a trade using a breaker block. Let's go ahead and get into it. What's up, everybody? In today's video, we're going to talk about breaker blocks. So the first thing we're going to go over is what is a breaker block. I hear a lot of people just call them failed order blocks. And, while I can see that logic, I'm going to go a little bit more in depth and make sure you understand what's actually occurring. That way you're better equipped to use them. Next, we're going to go over how and when to use breaker blocks, because there's a time and a place to use a breaker block. A lot of people ask me, when do I use a fair value gap? When do I use a breaker block? So I want to delve into that. Last but not least, everybody's favorite part, we're going to talk about entries. How do we actually use a breaker block to trade? I want you to pay very close attention. Make sure you put your phone to the side and watch all the way to the end of the video, because we're going to be going over some live chart examples, and everything that we're going to talk about is extremely important if you want to use this correctly. So first and foremost, we need to know what a breaker block is. Breaker blocks are also called failed order blocks, and they occur when the market shifts structure after taking liquidity into a reference point or a point of interest. Now, I want you to pay very close attention to the fact that we take liquidity into a reference point or a point of interest. So, for example, let's say we have a fair value gap, order block, you name it, whatever it is. And the market comes down, we form a short-term low, short-term high, and the market takes this liquidity and immediately pushes back off. This is where we're going to be looking for breaker blocks. Now, if we don't have this order block or this fair value gap, you might see a breaker block work, but I'm all about trying to cultivate the highest probability circumstances to trade in, so I like using a confluence with the breaker block. Why was this breaker block created? Well, if the market is pushing in and rating liquidity into a point of interest, that is a time when you're looking for a likely reversal. So I want you to always look for, some form of reference point or some form of, it can be an old low on a higher time frame. It could be an order block. It could even be a breaker block on a higher time frame from a time before. But whatever it is, you need to make sure that you're trading into an area where you're likely to see a reaction. So what happens in this instance and what causes a breaker block to work is, let's say if there are people shorting market structure and they are shorting here and they've got their stop losses here, and they may have a plan, they may not, they may be targeting something lower, and they weren't expecting the market to reverse. So when the market reverses, they are either going to be stopped out or they're going to be underwater, because a lot of retail traders, they're not putting their stop loss in a sensible spot if they even have a stop loss. So when the market comes back down to this level, which is the breaker block, then that order is going to be mitigated. So they're going to mitigate their losses. They're going to close out and potentially even enter new trades in the correct direction. So when we're looking at breaker blocks, we're looking at this last level right here. We're going to go on a chart and show you exactly which candles to select, but we're looking at that high because once traders are underwater, up in here, they're in the negative. Well, if the market comes down close to entry, they're going to close. So let's say if they were in a short right here and they close it, that's going to be viewed as the equivalent of a buy. Now with breakers, you have to be patient because after prices deliver with a ton of displacement, it's going to reprice lower. It's going to come back down into that breaker block. So now that we understand what a breaker block is and the reason that price moves rapidly away from them, let's go over how to use it. So first and foremost, something that I can't stress enough is you want to use breakers when the market is moving in harsh or consistent conditions, aka when your bias is clear. I cannot stress enough how much this helped me pick out the proper times to use breakers over other points of interest. So if the market is trending very heavily and you have a clear draw on liquidity, you're very confident in it, the market's bullish, and then price comes down and takes out a low and resumes its direction that you thought it was going to go. So you have this little run on stops right here. So this level or this area right here is manipulation because we're in a bullish trend. If we're bullish, we're looking at each low being taken as a buying opportunity. Now, if you didn't get in down there and price came up, displaced above this high, and you have some form of failed order block here. All right, once price travels back into that, since we are so confident and we are so close to our draw on liquidity, and the market is trending in a very harsh condition, we're going to look to enter in this breaker block. And then price is going to move up into that draw on liquidity. So again, you want to use breakers when the market is moving in harsh or consistent direction. So basically, whenever you're very, very confident in your bias and the market is clearly moving towards the draw on liquidity. You don't want to use breakers every single time that they arise. That's whenever we start to use fair value gaps or order blocks. But whenever we're using breakers, we want to make sure that the market is violently moving in the direction we are looking to trade with. Again, talked about this in the last module, but you want to look for the breaker to occur before price reaches an old reference point. So we'll draw another example. Let's say that maybe there was a fair value gap right here, right? And that breaker pushes down and we raid liquidity. We take out that low. Again, we have a very clear drawn liquidity above. So the market's traded into a reference point. It's traded into a fair value gap. It moves out with displacement. So we now have a breaker block, and this breaker block occurred when we formed a short-term high before a liquidity raid on sell-side liquidity. Now, another thing, everything that I'm teaching you guys, if you want to invert it, some people are going to ask, what about, a bearish example? The same thing, just inverted. So I hope that that helps. I don't want to go, teach the same thing twice. But whenever the market comes back, that helps. I don't want to go bearish example. The same thing, just inverted. So I hope that that helps. I don't want to go, teach the same thing twice. But whenever the market comes back into this breaker, since we're in a harsh trending condition and we took stops, we took out liquidity into a reference point, this is whenever you're going to use a breaker. So what we're going to look for in the chart is the last up candle that forms a short-term high. Now this is the important part. It has to form that short-term high before the sell side is taken. And this is a bullish example. So a bearish example, we have the last down candle. So for instance, if we're in a bearish example, since I haven't drawn any, let's say that market is moving and then the market comes up, we take liquidity into a fair value gap. So you've taken out the high right there, right? We're in a bearish trend overall and the market displaces down. So the short-term low, or the last down candle that formed this low, is going to be your bearish, the short-term low, or the last overall, and the market displaces down. So the short-term low, or the last down candle that formed this low, is going to be your bearish breaker block. So that's where you'd look to trade from. generating more lows. You're not going to look for an order block up here in a harsh trending market. You're just going to look at this as, let's say people who went long right here, whenever the market comes back up and they're not underwater anymore, they're going to close those buys, which is going to be the equivalent of a sell, and that's what you call mitigation. So in that example, we're looking for that last down candle that forms a short-term low. So notice that I'm emphasizing that it has to form that short-term structure. And this is where a lot of people mess up with breakers, so I want you to pay very close attention when we get to the examples, and I'm going to show you exactly what I mean. So again, after liquidity is taken, the market structure must shift with displacement, and then you're going to look for that last up or down candle that formed the short-term structure. So liquidity has to be taken. We have to have a market structure shift. So again, we'll use another example. So the market's moving, move up, we take out a low into, we'll say, an order block right here. And it can be an order block, a fair value gap, just any reference point. And then the market takes out that with displacement. If you haven't seen my market structure video, I encourage you to watch it because it's going to explain how I look at structure. So you need displacement. So let's say we've got that here. The market continued up, and you have this level here. We're going to get into the trade, and then we're going to look for our drawn liquidity. Let's talk about entries. How are we going to actually use a breaker block for entries? So what I want to do for this, I will put these here, these two methods, or take a screenshot or whatever, but I'm going to go in and show some live examples in the chart. We have the ES 1 hour chart, and we are looking at a bullish range. The market has made higher highs and higher lows. We are clearly drawing to the upside. So the market is in a bullish external structure. So it's normal to see price come down to a discount and clean out liquidity and trade into reference points. So this is totally normal to see this move down. The market is still trending up on an external level. So we look for price to come down and clean out this internal liquidity before moving to the upside. So as we approach areas of sell-side liquidity with reference points resting below, we can look for breakers to potentially form. So as the market pushes through, we now have a potential breaker, but remember, we need to see displacement to the upside. So we've taken out the sell-side liquidity, we've traded into a reference point, but remember, we have to have that displacement. So boom, now we have taken out the short-term high with displacement that formed before the sell-side liquidity. So this is very important. Notice how I'm not picking any of these levels here. We're noticing we made a low, made a high, the market came down and took out that liquidity. So this is what we're paying attention to. So whenever we're looking at the last up candle that formed the short-term high, we're going to look at this candle right here. And this is where people mess up breakers because they're going to want to draw just the last candle right before the down move, but you want to pay attention and make sure you're marking the one that created the short-term high. So the market came down, went up, and what's the last up candle before that short-term high? Right there. So that is our breaker block. So once price trades through it with displacement, we then are going to use that as our reference point. Now, as for entries, there are two types of entries we can do. Now, I'll go back and show you guys what we had talked about before. There's a direct entry on the breaker block where we use the breaker's full candle range for entry, and then we put our stop loss either under the breaker's low or high, or under the high or low level of structure. And we're going to target the recent liquidity pro trend. So in this example, if we wanted to use method 1 and just place a limit right on this level, you could either put a stop loss under the breaker. Now I recommend giving a little bit of give, for ES, I like 2 ticks. That's what I add that onto all stop losses. Or you can use a swing low or the lowest low of this rate. I recommend for beginners, whenever you can trade on a demo and get used to it. But if you're, just watching this video and you've never traded it, I don't recommend trying to just put your stop there because it's easy to mess up, right? A lot of people will pick the wrong breaker. You might pick this one and then you get stopped out and the trade runs without you. We're going to target pro trend liquidity because remember, the market is extremely bullish. Even though we've repriced, it's totally normal. Came into a discount, took stops into a reference point. Now we have displacement coming out, a breaker block. So you're going to target out this liquidity because remember, price moves from internal liquidity to external liquidity. So you've got relatively equal highs here. This is how you would target it in that way. So let's see how this trade played out. Trade was active right there. Pretty high RR trade. Don't expect this every single time. Market moves up, straight to liquidity. And this is whenever we know the market is in a clear trend, right? We get movements like this. We use breakers like this whenever we have a very clear range and our clear draw on liquidity, which is these equal highs. And the reason this is the draw, and if you guys haven't, I recommend that you watch my video on daily bias. But if we're looking at this, the market's in an external range, right? We've gotten displacement over here. We've formed liquidity. So we're going to be drawing to that liquidity. That's the expectational order flow. We're going to continuously make higher highs until we have a reason not to. And the second way, you could have just put stops under here. Would have still been a great trade, but lower risk reward, which is fine, especially if you're a beginner. Now for the next method, you would have waited until price tapped into this level, and then you would have watched the lower time frames for a confirmation. So if we're using a 1 hour, which is the chart we're using here, I recommend hopping to a 5 minute. And as price tapped into it, you can use two ways, and confirmation entries are different for everybody. You could have waited for a clear break of structure with displacement and just market it. That's what I usually do. Some people will always wait for a maybe a retracement down to a fair value gap. Now, if you did that, you got in up here. So again, you can wait for a close with confirming the displacement break of structure, because again, we're just waiting for price to tap into this reference point, give us a clear break of structure with displacement, and that to me is the confirmation. Now, if you want to wait and try to, let price return to a fair value gap, that's fine. I know that's most people's strategy. Mine's a little different. That's just how I trade. So same targeting method right here, you would have targeted the same level, because again, the trade's the same trade. We're not going to target differently based on our entry. The narrative is the narrative. The second way you could have done it was wait for a fair value gap to get tapped into right here. So you wait for the first fair value gap to get tapped into, it gets tapped into right there. Now, you can also get a little bit better risk to reward. If you're very confident in your analysis, you can put stop loss under the fair value gap. But in my experience, that results in a lot of getting wicked out. And that's normal. I mean, if you have a higher risk to reward on average, you can afford that, but it's not really my style. So you could have done that or put stop losses down here, which would have obviously given you a little bit worse of a risk to reward. Now, something else that I want to point out to you guys, and this is kind of a hack, so to speak, with breakers. Whenever we have a breaker block with a fair value gap nested inside of it, that becomes 10x the confluence that level will be respected. So if we're looking at this breaker and then you see another fair value gap inside of it, you notice the reaction here. But that is one of my favorite entries of all time, is that breaker block combined with the fair value gap. So you see how all sorts of different things are coming together. We have our bias, which is clear. The market is trending up. We are looking for equal highs. So we're just wondering how to get there. So we expect price to reprice into a discount and take out liquidity on the internal level, so it can then expand to the external. Liquidity. That's exactly what happens. But again, we want to make sure we focus whenever we're trying to use breakers. You have to use that last up candle before the short-term high is formed. We're not going to use the last up candle before stops are taken. It's the last up candle before the short-term high is. Can't stress that enough. For extra confluence, you can look for a fair value gap. And for those of you who are asking or going to ask for a different example, this is what it would look like from a bearish example. Again, it'd be that last down candle before the short-term low was formed. And I know the colors may mess you guys, but hopefully you can understand. And this would be buy side liquidity. Now, something else to note is that you can take partials along the way. Especially if you're a beginner, I recommend, looking is that you can take partials along the way. Especially if you're a beginner, I recommend, looking for, you can take partials, and this would be buy side liquidity. Now, something else to note is that you can take partials along the way. Especially if you're a beginner, I recommend, looking for liquidity, looking for fair value gaps, because again, if your bias is wrong, the trade may not work out, or it may work out for a short amount of time and then turn around on you. And, no matter how good of a trader you are, partials are good because we're not going to be right all the time. So you could have taken partials at this fair value gap. And again, you can use just premium and discount of the leg down. So you could take some partials at equilibrium and really just look at the chart and say, what areas could this possibly have problems at? Maybe it's this order block over here. Maybe it's going to be this fair value gap. Maybe it's going to be as soon as price gets to a premium. But you always want to be taking partials to cushion the blow if you are only half right. Because it really sucks to see a trade run, multiple R, and you could have made some money, but you just didn't take any partials. So always take some partials. Every trade's going to be different for that. But again, I just recommend using premium and discount of the leg that gave you the trade. Right? So that's it for breaker blocks. If you guys have any questions, throw them in the comments. Also, if you have any video suggestions, let me know. I'm going to be releasing videos every Monday and every Thursday.
That's always nice to see. It's always nice to see a bit extra volatility and movement in the market. So we've seen that. So can't really complain. All I do wish is that everyone is healthy and well, looking after themselves and their families.
Cool. Well, look, let's get on with the show now. I tried to hunt around and find as much information I could about you, and I obviously missed, by the sounds of it, I missed a good chunk of it. So to start off with, tell us a bit about you personally and how you first got into this business.
Sure. So I started looking into trading late 2013, early 2014. Now, I started to learn to trade and want to learn to trade for the reason that the majority actually want to learn to trade, because of money, because they see things on the internet. There's a lot of misguided information. You know, a lot of people say that it's easy, make this, you can make that really quickly. So I thought, wow, great, let me jump onto this. And I was soon hit with the reality of it's not actually like that. Went through processes of obviously losses, large losses. But I always said to myself, if I can see other people doing this, why can't I? And that's really what made me stick it out. So I kept basically recording my losses, learning from my losses, and trying to do as best as possible to learn where I was going wrong. So I'm a trial and error trader. That's how I got to where I am today, purely and simply from trial and error. There's two ways you can learn from them now. Is that you can actually learn from the market, learn from your losses, or you can learn from a mentor. And that's what I am now. And I'll go into a bit of a detail about how I actually become a mentor, because I didn't actually set out to become a mentor. It sort of come to me. So then what I did is I basically started documenting my journey on Instagram. And it was very early on Instagram. There wasn't too many traders on Instagram, and that's how I've managed to now build it up to about 85,000 followers, purely and simply just posting my journey. And how I actually, it took me about 2 years, the process of actually getting to the consistency stage. 1.5 years to 2 years to get to the consistency stage, where I then started to be consistently profitable. And then on it, loving my stuff that I was putting out there, because I was new to me. So I was trying to help as many people. So I kept posting my journey, and then people were reaching out to me and asking me, can you teach me? And I had never taught before. And because I had never taught before, I didn't think of charging people or anything like that. And I started meeting up with people in coffee shops and teaching people for free. And then they were becoming successful. So that then highlighted to me that I could share this knowledge with other people. And it was the feeling of actually seeing these people succeed from the information that I was giving them. That was the real buzz of it. It wasn't then being able to charge the buzz of it of, wow, I'm now sharing my knowledge with these people.
Maybe this is zero from the beginning, but I heard your voice and I said, that's impossible. That should be like case. But yeah, how are you guys?
No, oh, you gotta mix it with water. Oh shit, it's a concentrate. What the fuck is a concentrate, dude? Oh, the drugs. Did we do coke once? I did. You did coke? I was in Thailand. I gotta go check Thailand. How you guys do today?
Any trades, Cosmo?
I'm not trading now. I'm not trading like for the last 10 days. Waiting for the next week to continue. I just entered Discord to see what's happening and just to stay updated. But I'm not trading. I'm just taking a break. Took the break now. Still 3-4 days. After next Tuesday, I will be back to normal trading and normal work.
Harvey, I don't think the daily actives are correct. It can be 44, 14, 25.
Oh, okay. So that was my adaptation. Right. I'll build them correctly. Right.
Fuck.
Yeah, sorry. Maybe it was my adaptation because of that movement in the morning. But I mean, it's still.
It should be.
Yeah. Hold on a second.
Yeah.
I kept it to the CPI movement. That's what
I see. I see.
Right, and then I don't know.
We should be breaking the highs of the days, FYI, guys. So one indication you can see is that what we did as far as breaking Asia's highs, London's highs, coming down, that retest at like 43.96 is roughly about midway of London and Asia, and bouncing that.
Oh, here's a mover. Like,
oh, yeah, talk him through it. Talk him.
no,
sit down. Talk him through it.
no, it's a weird like.
Talk him through it.
Okay,
sorry guys.
You see how you have these gaps?
Share screen.
Oh, I don't know how to do that.
Yeah, let me show you. God damn it. We're gonna share a screen. So you can share this one, which is here, or share this one. So share this.
Okay.
Okay. So you guys see it?
Oh, hold on.
All right, go ahead.
What is this? A fucking telephone?
It's this vertical screen. So go. All right, talk it.
Yeah, I always like want to